It's Brian Preston, the money guy.
Your 60s, this should be the point in your career or the point in your life where this is a culmination of lifetime dreams. This is where you want to be able to, if you've done the things you're supposed to be able to do things the way you want, when you want, and how you want. This is the payoff of all the hard work you've been building up to this point.
Yeah, you get those life dividends, as
That's
we
right.
like to call it. You know, that's where you're enjoying the grandkids. You're hopefully getting to travel. You know, your money's working for you. You're going counter to the rest of the working world, where when you go to Costco and Target, there ain't nobody there. And maybe you're getting the lower cost when you take the grandkids to Disney World. You can do it in the times when everybody else has a hard time taking off work. Take advantage of these life dividends.
All right, so let's think about the financial planning pyramid as it relates to someone in your 60s, right? When it comes to cash flow, decisions on retirement distributions become huge. Decisions on Social Security become huge. Decisions on pensions become huge. You have to decide, if I'm going to step away from using my hands and my back and my brain to go out there and generate my cash flow, I'm going to count on my portfolio and my hard work up to this point to do it. You want to make sure you're thinking through what is the best and most optimal way to do that that's going to provide me with the largest probability of success over the long term.
Yeah, and I think cash flow wise, you also have to kind of reevaluate or reprogram the way you've looked at cash reserves. Most of your working life, it's 3 to 6 months of cash reserves. I think when you're actually living off of these resources, you're no longer a builder, you're now more of a consumer of what you spent a lifetime of building. It's not uncommon for your cash reserves to expand out to 12 months all the way out to 36 months. It really is more specialized to what your goals, what your risk profile, and what you're trying to accomplish in retirement fall to. But there will be a big shift on the way you handle cash flow.
And it's pretty common sense why. If you're living off of these dollars, and let's say we go through a time like we're going through right now where the market is volatile and your investments are likely down, you don't want to have to sell those investments to provide cash flow at the world's worst time. If you have 18 to 36 months of cash, it's going to allow you to bridge that gap. It's going to allow you to get through whatever the market's going to throw at you and allow your portfolio to recover.
Let's talk about risk management, because it is interesting. So much of your life, and we're talking about all the insurance planning and so forth, and then you get to this point in your 60s where Medicare, I mean, it is, you're going to come off, yes, you'll have some of potentially a supplement or something with Medicare, but it is, make sure you do all your planning, measure twice on that to know if you need the supplement, but, how much is good, what is actually the government going to cover you from hospitalizations, doctor's visits to your prescriptions. And then this is also a place, if you wanted to, long-term care, just pay attention and read the fine print. It's not uncommon in the last 3 to 5 years, I've seen more long-term care policies that were written over a decade ago being reinstated by where the insurance companies are coming to the state insurance commissioners, getting premium, getting increases and asking and lowering the benefits. Pay attention to the fine print if you are considering these things, but it's definitely something to consider.
And so from an investing standpoint, it's interesting. This just hit me. I'm going to ad lib a little bit here.
Yeah.
We put don't turn into a turtle, because oftentimes folks think that when I get to retirement, okay, now I need to be conservative. Now I need to put all of my money under the mattress because I can't afford to lose anything. I've spent my whole life building this up. Don't just go in your shell and hide, because some portion of your army of dollar bills still needs to provide for you likely 30 or 40 years in the future. So you still need to have some of your assets on the risk side of the table. Now, I'm going to say the other thing that I didn't think about. You should neither be the tortoise nor should you be the hare. Because we see this all the time with entrepreneurs who say, man, I'm a cowboy. I'm always coming from risk. I don't care what the market does. I am just going to hang it all out there. That may not be true either. You need to recognize that when you're in this stage of life, you want a Goldilocks. How many kids' stories am I going to tell right now? You want a Goldilocks portfolio. It doesn't need to be too aggressive, but it also doesn't be too conservative. You need something that matches you right in the middle, right where you are.
We actually had an example. We pulled this from one of the index target retirement funds. I think this is the Charles Schwab Target Date Fund. You can see this is a natural glide path that they've created on the way the asset allocation changes from when you're young and can be super aggressive to when you're older and living off of these assets. I do think it's important because we hear a lot of people who are part of the FIRE movement or retirement community, and they talk about safe withdrawal rates, because we've all heard for years our 4 to 4.5% safe withdrawal rate. Realize a big driving factor of that is assuming that you're keeping 50% of the assets in some type of growth form. And you can see that's also reflected in these glide paths. So pay attention to that. You don't just go one day, wake up, you start living off the money and go straight to 100% into cash and annuities and things like that. That's not historically what people have done when they're trying to do a balanced retirement approach.
Yeah, don't let fear cause you to make bad decisions. Don't run to the annuity product. Don't run to the CD. Don't let fear control you. Remember, when it comes to investing, you have to balance fear and greed. You have to take control of your emotions. In your 60s, this matters a ton, because the decisions you make will actually have large ripples all throughout the rest of your retirement.
Let's talk about something I love nerding out on, is taxes.
Okay.
I mean, I do think when you're in your 60s, taxability of Social Security, Medicare surcharges. Now, when I see here Medicare surcharges, that's for high-income people that pay the 3.8, but it's actually the higher your income is, the higher your Medicare premiums are going to be too. So pay attention to that. And there's a lot of things that will come into play, because also realize a lot of the tax code, because you have some ability to manipulate this legally, if you know how, if you have the 3 pots of money, is that maybe you can qualify for the zero capital gains or the lower dividends and so forth. So pay attention to your income and the tax planning and which pot of money you are pulling it out of as you're living off of these resources and assets.
And again, this might be that time. Once you've won the game, you've already crossed home plate. Now you just want to make sure that you can keep the ship moving forward. This might be the time where you want to have a second set of eyes. You might want to have somebody making sure that they're helping you stay on top of your financial life. It might not be crazy to think about hiring a professional at this level. Even though you're not in the accumulation anymore, the planning and strategy doesn't stop. Doing things like Roth conversion strategies or RMD avoidance or charitable qualified charitable distributions. All these are strategies that will take place from here through the end of your life. So it might make sense to have a professional going on that ride with you.
Now, look, estate planning wise, Bo, I kind of count on the fact that you are doing a very proactive, you're not taking a passive role with having the wills, the living trust, the revocable trust, whatever you need to have done, you've done it. But what I don't want you to do is not communicate that with your loved ones. I mean, if you've got, hopefully you've accomplished what the Millionaire Next Door talks about. You've got those adult children who are out there creating their own financial legacy, but you need to have conversations. Don't keep it a secret, because you don't want it to be a big surprise when something happens to you, that your kids and whoever is going to be in charge of unwinding it all or sorting through it, that they're like, oh my goodness, if we'd only known a little bit more, we could have planned accordingly. Don't let this uncomfortable topic keep you from preparing.
And I feel like a lot of folks that we interact with, there's this insecurity that sets in where they think, no, I'm on top of this. I've got this. My financial situation operates. And we have to have this conversation with families all the time. Yes, that person that passed away, they were on top of it. And what they were doing made a lot of sense, and they were incredibly good at it, but only they understood it. They didn't let their spouse know. They didn't have a part in that. Their kids didn't know. And so it's very difficult if you don't have someone else on board to make sure that all that hard work and all the strategy put into place can continue forth for your loved ones and for your heirs.
I do think this is a decade of beyond, because this is 60s and beyond, that this is a celebratory time if you've done the work and put the work in. But don't just, while you're out there enjoying the grandkids and all the dividends, like I said, travel, don't neglect still being a planner. You have to have a planner's mentality to make sure that you're navigating all the financial decisions, and hopefully a little bit of this nudged you in the right way so that you can talk to your loved ones and get things on the right track.